Welcome to Good for Bitcoin, a weekly show recorded live every Friday where we recap the top events of the week and talk about everything that is good for Bitcoin. If it's built on Bitcoin, then it's good for Bitcoin. Let's get started.
Content shared on this podcast is for informational and entertainment purposes only. It does not constitute financial, investment, or legal advice. The views and opinions expressed are those of the host and guests and do not reflect the official policy or position of any other agency, organization, or company. We encourage you to conduct your own research and consult with a qualified professional before making any financial decisions.
Well, hello, everybody, and welcome to Good for Bitcoin, your weekly pulse on Bitcoin innovation. My name is Brandon, joined as always by my co-host Kate. Kate, how was your week?
Hey, Brandon. Yeah, it was a good week. Like, we were just kind of chatting a little bit before the show. There was some, little bit of drama, some good stories happening this week. Otherwise, it was just like a rainy spring week here in Montreal, but we got some sunshine today, so I'm feeling excited going into the weekend. But yeah, excited for some of the stories that we'll talk about today.
Yeah, we have some fun ones to get into. Very similar with me. It was it was rainy beginning of this week, and then it's been sunny the past couple days, and then it's supposed to start raining again in a couple days. So it's a short burst of sunshine for a couple days, but back to rain, springtime. Let's see. We are live on goodforbitcoin.com. Thank you for everybody that is tuning in. Love to see that. And we stream from YouTube and all the places. So thank you to everybody that is listening. I don't think so.
We cut that off.
Yeah, I think we cut that out. We are no longer on pump.fun.
That's good. That's probably the right brand call, you know?
A short-lived experiment. But yeah, we own our own website now, so that's great. Go. Yeah, so goodforbitcoin.com. But yeah, we have a lot to talk about. Lots of companies buying Bitcoin this week. You put this one in here, and I updated it yesterday because it had grown even higher. So I'm going to let you kick it off with this ETF news.
Let's do it. So BlackRock's IBIT has seen over $700 million of inflows this week. No outflow since last week. I think when I put this in here, it was at 500 million. So that's an extra 200, which is crazy. So it's booming.
Yeah, very curious to see. It's always delayed by a day or two. So I'm very curious to see what it's going to be today, just because Bitcoin has gone up so much in price today that I feel like that there's going to be a lot of inflows today. But yeah, just on the 15th, there was $291 million worth of inflows on the 15th. That was 2 days ago. So yeah, people are buying Bitcoin. Seems like everyone's buying Bitcoin because the price is going up a little bit, which is
crazy.
It's nice. But that includes, of course, Strategy. They bought 13,927 BTC. They now hold over 780,000 Bitcoin. And with the price appreciation today, Bitcoin being above 77K, they are now back in profit on their BTC holdings. So they are no longer underwater, which I'm sure Saylor is very happy about.
Yeah, I don't know if you saw his post. I think it was today he posted it. It's him on a yacht and it's just Bitcoin and chill.
Yeah, he was it's another AI generated photo of him.
Yeah. Oh, it's good. That's good. He's having a good day.
Yeah.
Then we have Strive. They bought 27.1 BTC and now finally hold an even amount of Bitcoin at 13,768. They've also increased the dividend on SATA by 25 BPS to 13%.
Yeah, I remember the past few weeks whenever we've mentioned Strive, it was 0.9. So they finally added that extra 0.1 in there. So now we can just say it's an even number.
Perfect. Love it.
Some smaller ones, Capital B, they revealed a 37 BTC purchase this month. So they now hold just under 3,000 Bitcoin.
Nice. Then we have Smarter Web Company. They bought 11 Bitcoin this month and they now hold 22,706 BTC.
And Canaan Inc. bought 15 BTC this month. They now hold 1,808.
And then we have our only sell of the week, our only major sell, I guess, is Bitfufu Inc. They're a Singaporean Bitcoin miner. They sold 36 and they now hold 1,794 BTC.
Miners are continuing to sell.
They need to
Meanwhile,
cover
everyone
those
else
costs.
is buying. Bitfufu.
Bitfufu, I love it.
It's funny. Okay, lots of news to talk about. I
Yes.
feel like every story is like a big story. So first one is Goldman Sachs. They are jumping into the Bitcoin ETF game with a Bitcoin premium income ETF. So it's not like a spot Bitcoin ETF. It's kind of similar to like STRC from Strategy, where it's like designed to like capture the upside of Bitcoin and you're kind of like getting it from there. Basically what this does is it gives investors Bitcoin exposure while using like an options based premium to generate income. I was trying to consult Grok on like how this actually works. So the explain like I'm five is basically like you if you buy this, you are basically renting out the right for someone else to buy your Bitcoin from you at a slightly higher price at a later time. So they are paying you cash up front, which is like a premium for that right. And no matter what the price does, you get to keep that cash. So it's like extra income that you get for owning it. If Bitcoin's price doesn't go up a lot, they don't exercise that right, but you still get to keep your Bitcoin and the premium. So you still get some money there. If Bitcoin went up a lot, they still get to take your Bitcoin at that price that was agreed upon. So if there's like a huge upside, then you don't get to capture that as much if you own it, but you're still getting an upside from the premium that you're earning from the people that are buying the exposure. So you're still getting gains, but maybe not as much.
Mm-hmm.
So you'd want to get something like this, I guess, if you are like convinced that Bitcoin's going to be like relatively flat for a while, and you'd rather get some income that way instead of just like holding and having it be relatively flat. So I guess that's kind of what it is. But the fact that it's Goldman Sachs that's launching this, again, like Goldman Sachs, we've talked about them on the show a few times. They were kind of one of the last big holdouts for like crypto and Bitcoin adoption. So the fact that they're launching something like this is pretty interesting.
Yeah, very cool.
Yeah.
With stuff like this, does it matter like the size of position you take? Like, do you have to probably meet like a minimum, I don't know, portfolio value or something, or is this?
I don't
like
think so. If it's an actual ETF, then no.
Yeah.
Yeah, you can just buy whatever the share value is. I don't know what the share value is going to be, but same thing as like, you know, if you're buying like IBIT, I think it's like $42 or something like that is like what it costs. It's, you know, a lot cheaper per unit than like one BTC. So yeah, if it's an actual ETF that, you know, gets approved, then anybody can buy it in their portfolio.
Nice. Well, let's get into the drama.
Yeah. I don't know how much you've seen. There's a lot to talk about with this stuff going on with World Liberty Financial. And I'm very curious to hear what you think about it.
I saw you put it in here, so then I like did some digging into it. I mean, am I surprised? Like, no. But like, anyway, we can get into it.
Yeah. So let's
do you want to start
or
okay? Because there's been some updates since you put this in here.
Oh, really? Okay, you'll have to update me. Okay. So there's this guy, Corey Kaplan, who also co-founded this DeFi lending platform called Dolomite, and he is an advisor to World Liberty Financial, which is affiliated with, you know, the Trump family. It's one of Trump's businesses. And last week, WLFI, which is like their token, they deposited about 5 billion WLFI tokens as collateral on Dolomite to borrow about $75 million in stable coins, mostly in USD1, which is their stable coin, plus some USDC. And then a significant portion of those borrowed funds were then routed to Coinbase Prime, which many interpreted as moving liquidity off platform. It was about like $40 million that went over to Coinbase Prime based on like on-chain data and stuff like that. And this was a big problem for a lot of people because this pushed Dolomite's lending pool utilization super high, upwards of like 93%, which basically made it difficult or even impossible for other users or like people that had, you know, contributed to the pool to withdraw their funds easily without, you know, repaying and making repayments. So as of last week, maybe this has changed with your recent updates, but their deposit now made up roughly 55% of Dolomite's entire TVL, which is not great. And yeah, people were basically stuck, you know, with their funds in there because basically World Liberty removed all the liquidity with this loan. And the big conflict was they they minted these tokens and then used those newly minted tokens to take out a loan, which reminded me a lot of like the FTX days, which is kind of very similar to what FTX was doing, where they were using their own FTX token as collateral for loans. And that was what brought down a lot of the other companies that were servicing FTX with loans, like BlockFi and Celsius and all these other companies, because they were accepting FTX's own token as collateral for their loans. So obviously FTX blew up, the token went to zero. Suddenly there was no collateral to liquidate, and it just caused this cascading, effect of everybody getting wrecked. So I'm very interested to hear your recent updates on this, but not a great look for the Trump family to just be following in FTX's footsteps a little bit, maybe, and collateralizing loans with their own token that they have the power to just like mint on their own.
Yeah, it's like a horrific crypto circle trap that you just never want to get yourself in. Okay, yeah, so the updates that I've read since, obviously, like their token has dropped to like record lows because the market's kind of seeing what's going on. But Justin Sun, who's like the founder of Tron blockchain, he was an early backer, I guess, in World Liberty Financial. And he's now publicly turned on the project, basically saying like this is a personal ATM for insiders. Like internally, World Liberty is saying
when Justin
that, like,
Sun is calling something a scam, it's
it's get bad. Out. But they're accusing Justin of like trying to sell his tokens early. So like now that there's a Twitter battle, and World Liberty tagged him in like a post basically saying we'll see you in court, which is just classic. But then so World Liberty Financial then minted I guess like to start like repaying the loan. It seems like they have basically like created a new increase in their stable coin. So they've like made more tokens to like repay the loan, which obviously raises like even more questions. And then they were proposing to unlock like billions, like 62 billion additional tokens that were previously locked with no vesting schedule. And this came like a week after the borrowing controversy. Yeah, it's pretty crazy. And it's just like I said, like it's the circle of death in crypto when you're just like borrowing and creating nothing out of thin air.
Mm-hmm.
But it's now getting like public figures involved in lawsuits on X. So
yeah,
it's pretty crazy.
This is pretty wild. It is at least good that this is DeFi, so it is at least like you can go on there and you can see who's borrowing, and you can see that there's a massive concentration, and maybe steer clear of that. But yeah, not great. Maybe don't use this platform. There's probably a lot of other ones that you could use, like Aave and Morpho and stuff. I don't know what separates Dolomite from like other platforms, but there's many many other DeFi lending platforms out there that are huge, that have a lot of liquidity, and that you don't have to deal with this. So maybe use those instead.
This is financial advice.
That is financial advice. Yeah. Don't get wrecked.
That's funny.
Okay. Yeah, that's funny. All right, moving on. So update to some of the quantum stuff. So Presidio Bitcoin, which is sort of this Bitcoin group that operates out of San Francisco, they published a detailed technical report that was assessing quantum computing's threat to Bitcoin. I'm sort of just recapping, where we sort of stand today and what needs to be done about Bitcoin. So there's a really good report. It's like a long PDF. I would encourage everybody to take a look at it to get up to date. I'm just going to run through like a few bullet points that I thought were like the most interesting about it. So basically what they shared is like the core vulnerability for quantum. Pretty straightforward for those that have not been following. Basically, these new quantum computers are getting more powerful and getting more viable to exist and run these different algorithms to derive private keys from public keys. And if a cryptographically relevant quantum computer existed today, an estimated 6.5 million BTC, roughly a third of the total supply, would be immediately vulnerable to theft. So definitely a big deal. That's a lot of Bitcoin. That would destroy things pretty quickly. So over 2/3 of that exposure, which is approximately 4.5 million Bitcoin, comes from address reuse. So much of it is concentrated among like a really small number of large custodians that just operate that way for simplicity. They reuse addresses. Basically, that means that they're sending Bitcoin like to the same address like multiple times, which exposes the keys when they do that. So that portion is reducible today without any protocol change just by rotating to fresh addresses and only using addresses one time. And then the remaining structural exposure includes 1.72 million BTC that's in these legacy outputs. Many of them, like Satoshi's coins, for example, are in these legacy outputs of Bitcoin, and or they're like lost coins, and nobody has moved them in a very, very long time, but they could then be moved if there was this quantum break. So for addresses that have never spent BTC, where only a hash of the public key is visible on chain, these are not currently vulnerable under like the current understanding of how quantum works. Of course, quantum could come out with some revelation that changes that, but that's kind of the current understanding, is that if you are not reusing addresses, your Bitcoin is maybe safe. This also, I didn't put this in here, but for like Lightning, for example, if you have anything in Lightning, all Lightning addresses are publicly exposed because that's just how Lightning works. So if you have, any money in Lightning, that is quantum exposed. They also talked about, I think we mentioned this last week and the numbers were a bit higher, but they said if 25% of block space was dedicated to migration, like people trying to, move their Bitcoin over to like new addresses, then 90% of Bitcoin's value could move within 4 days and 98% within 3 weeks. So it wouldn't take, I think an episode or two, we said that it would take potentially like months to do that. So their estimate is a lot lower. And also the timeline for, when this quantum break might happen is uncertain. They said recent expert surveys place a 50% probability with these machines emerging by between 2030 to 2035. So that's still not that much time. That's potentially only 4 years away. So it's still very important to act quickly on this because we know how long it takes for Bitcoin to change and do anything like that. But this has, again, kind of reignited the conversation on what to do with all of these unmigrated legacy coins, like Satoshi's coins is the biggest one, and other lost coins that are on chain that haven't moved in years and years and years. What happens to those coins, right? Do they get frozen or do they stay exposed? And that's kind of the main question. And you put in some proposals that some other folks are working on. So curious to hear your thoughts on that. But that is the recap of quantum and where we are today.
Yeah, I feel like this is going to be like one of the most like philosophically challenging moments for Bitcoin. And so, recently, like on the timeline, I was seeing some, big names, big Bitcoiners in the space talking about like different proposals. So the first one that I saw was Jameson Lopp, and sorry, there we go. I lost my notes.
Yeah, I'm just moving some stuff around because we should talk about this first. Jameson.
Okay, so he co-authored BIP, and it's basically proposing to freeze quantum vulnerable Bitcoin. This would include Satoshi's Bitcoin, his $74 billion stash, before quantum computers can steal them. And so his whole thing introduces like a 3-phase approach for transitioning. Phase A would be disallowing sending any funds to quantum vulnerable addresses 3 years after the BIP is activated. Phase B would be rendering ECDSA or Schnorr. I can never pronounce that. Schnorr.
Yeah, Schnorr.
Spends invalid, preventing all spending of funds in quantum vulnerable UTXOs. And this would be triggered 2 years after. And then phase C would be a separate BIP that would be proposed that allows quantum safe recovery of legacy UTXOs, likely via a zero knowledge proof. So, I mean, that's a pretty intense stance, is basically saying like, if you don't move your funds, if you don't move those, they're not yours anymore, which is definitely pretty severe. And then you have Adam Back, who was calling for optional quantum safe upgrade. So he does not agree with Jameson Lopp on this and this whole plan to like freeze vulnerable coins. I mean, I don't either. Like, I just think that it really defeats the whole purpose of Bitcoin. And like in my head, I was thinking of ways of like, what if we did like a decentralized quantum hack? And so then we could like take the Bitcoin and use it for the public good. But then I'm like, that still goes against like, your keys, your coins. And I don't know if there's a way to make, like, if someone did come and steal the coins, I don't know, is there like a community-wide rejection of like, we will not trade or use these coins moving forward? I don't know, but
yeah, I mean, there's a few thoughts I have. Like, one, if we do nothing and or maybe we all migrate over to some quantum thing, and Satoshi's coins just like stay, unlocked, I guess, and available for anybody to take. I mean, that's going to happen eventually.
Yeah.
If nothing happens, right? So do we take the Ethereum route and, fork the chain before like the quantum break happened? No, like we can't fork the chain and reverse the blockchain, to do that. Like that's very, very anti-Bitcoin. Do we freeze the coins from being spent? Also risky because, maybe Satoshi, is either like dead or just does not plan on moving these coins ever, and like freezing them would be okay. But there might be people that are just holding for a long time, right? And what if people that are holding for a long time, they get their funds locked because somebody assumed that they were lost coins and no, they're not. So yeah, we don't want to do that either, but we need to do something because these funds are gonna get taken eventually.
Yep.
There's also like I've seen discussions on, do we, assuming that we could like identify that these are for sure from Satoshi and we're just going to maybe freeze only Satoshi's coins and not these other coins, does that then cause us to like be reducing the max supply of Bitcoin? Like, is it no longer 21 million? Is it, less because these coins are frozen? So yeah, there's a lot of philosophical questions with this, and I don't think that there's like a perfect answer yet.
Yeah.
There's all these compromises and things like that. I do think though that like looking at this proposal, a lot of people were just looking at like phase A and phase B and not really paying as much attention to phase C of Jameson Lopp's proposal. And it's not just Jameson Lopp. It was co-authored by a few others. Yeah. But he was kind of the first author on the list. I think he's the most recognizable name at least. And that is, this separate BIP that would be proposed that would allow a quantum safe recovery of these legacy UTXOs. But yeah, the downside is those coins could potentially be stuck or frozen for 5 years or more, until this other BIP gets proposed and then approved and then implemented. And, again, we know how long these things take in Bitcoin. So it's going to take a long time regardless, even if, maybe these coins are temporarily frozen, not permanently frozen. And there could be a way of, recovering them in the future, but that's like years and years away.
Yeah. I've also like seen, for instance, the founder of Cardano, Charles Hoskinson, he was critiquing this saying, like this is a hard fork and that if you do implement it, phase C can't actually happen because like I don't even, how many coins does it even have? Like over 1 million, 1.5 or something. Like it's a very high number. They predate BIP 39 C phrases. So he was saying that like it's fundamentally unrecoverable, but I don't know. But there's definitely like some critique around phase C. Obviously, I feel like that would be the most ideal. It's like if you can prove that you are the owner, you should be able to recover them. But like, I'm just not sure if that's actually possible.
Yeah, that's a good point.
So
yeah,
we'll see.
All the mathematicians and cryptographers of the world, this is a problem for them.
Yeah, not for me.
Figure out a solution for. Yeah. We can talk about the psychology of some of these things. Yeah, in terms of like how would you actually implement, phase C? Like I have no dang clue.
Yeah.
Okay, moving on. So this one I thought was cool. So Pakistan's central bank, we've talked about Pakistan a few times on the show. They overturned a ban that allows banks to open accounts for licensed Bitcoin and crypto service providers. So basically what this means is that banks can now provide basic banking services like client money accounts to regulated crypto firms and their customers, sort of like an Operation Choke Point 2.0 in Pakistan is what it sounded like was there. So this just reduces kind of that regulatory burden and makes it so that banks can do this stuff with crypto companies now. Banks still cannot hold, trade, invest in, or allow crypto transactions with their own funds or with customer deposits. Everything stays in these segregated accounts with no cash handling or commingling. So, this basically just formalizes what was already kind of a large sort of informal and gray market crypto scene in Pakistan, which is one of the top countries for retail adoption, which is largely driven by remittances. So yeah, crypto continues to move forward in Pakistan.
Awesome. Love it. You can take the next one too on the Bitcoin halving.
Yeah, Bitcoin has officially reached or surpassed now block 945,000, meaning that we are now over halfway to the next Bitcoin halving. When that happens in a little under 2 years now, the Coinbase subsidy per block will drop to 1.5625 BTC. So we're 2 years into, the 4-year cycle. How are we doing compared to previous years? Bitcoin is up a little bit today. Yesterday, I asked Grok kind of, how are we on track compared to like previous 4-year cycles? Because we always hear people saying that the 4-year cycle is dead. I always say that I don't think it is. So here's what Grok said. Grok said, price-wise, the current Bitcoin 4-year cycle is following the historical pattern closely in terms of timing, but with smaller percentage gains and milder volatility so far, which is consistent with Bitcoin's maturation as an asset. And the 2024 cycle peaked right on schedule in October of 2025 with a new all-time high, mirroring the timing of 2016 and 2020. Price-wise, we're right where the historical template says we should be 2 years after a halving, past the euphoria peak and into the cooling off/bear phase. The absolute price, which at the time was 68K, it's 72K today, I think. Maybe it's a little higher than that, actually. It's gone up a lot today. Is far higher than at equivalent points in earlier cycles, but the percentage upside from halving has been the smallest yet. If the pattern holds, the bulk of the correction may still play out through late 2026 into 2027, ahead of the next halving in 2028. Past cycles aren't guarantees, of course, but the 2024 through 2026 experience has tracked the script remarkably well so far. So it seems like so far we are still very much in the 4-year cycle on Bitcoin.
Yeah,
basically.
It is. Yeah, you've always beat that drum. It's not dead. And a lot of people think it is just because of like institutional inflows, ETFs, stuff like that. Basically just like bigger players absorbing some of the volatility in the market. But I don't know. The numbers aren't.
Yeah. I mean, we'll see. Bitcoin's gone up today, like short term, we'll see. But yeah, it just seems like, we're 2 years in and this is how it goes, right?
Schedule.
We're like two years and like we have like kind of 2 years of excitement and then 2 years of like kind of like blah, Bitcoin's mostly flat, not super exciting. And we're kind of like in that phase. And of course, like we're going to have like short little like peaks and valleys and stuff. People are really excited about, Bitcoin's price today. It's gone up a lot, but over kind of a longer period of time, I think it's just going to be relatively flat until the next halving gets here, or at least gets closer.
Yeah. Well, let's get into some quick headlines that we've seen. Honestly, I'm looking at the first one that I put in here and I'm thinking like, that's maybe not as exciting as I thought. But I saw this, someone posted a chart and they were just saying whales bought 270,000 Bitcoin in 30 days, which is the biggest accumulation since 2013. I haven't fact checked that, so I'm actually not sure. But basically it's saying supply is getting tighter as demand for buying Bitcoin keeps growing.
Sounds directionally correct. I mean, look at how much Bitcoin like strategy bought, over the past like month. Yeah, a lot of Bitcoin. Okay, where are we? I lost my place. Okay. Yes. So some small SEC news. The SEC has basically ruled or said that certain crypto interfaces, including DeFi front ends, wallet extensions, and apps may operate without a broker-dealer registration as long as they are self-custodial only and strictly limit activities to user-directed transactions. So they can't do things on behalf of a user. But this is really great because there was a lot of, I think, even, with we're waiting for like the Clarity Act still. So there was kind of some uncertainty there. But there's been kind of some back and forth on some of the wording with, whether wallets, especially, if you have like Leather or Xverse or Phantom or whatever, right, would have to register as these broker dealers because they are like technically moving money around and stuff, but you are the one that's ultimately doing it. They're just facilitating it. Because it's self-custodial. So nice clarity from the SEC. I guess the bulletin that they posted has like a 5-year shelf
Yeah.
life. So it effectively gives DeFi like a 5-year safe harbor until hopefully within 5 years, we'll have the Clarity Act that will codify these things. We'll see.
And 5 years in crypto is a very long time. So
Very long time. Yeah, things are going to be very different by then, I'm sure.
yeah, speaking of Clarity Act, I've seen rumors on the timeline that Trump is set to sign the Clarity Act. I've had notes from JP Morgan Chase saying it's nearly done. Fox Business had like a note about it saying banks are upset with Coinbase because they were forced to accept Clarity Act. So it seems like it's going to happen anytime soon. I don't think it's been officially signed, but should be coming.
Yeah, hopefully
We
soon.
keep saying that, but
We're running out of time. I know.
yeah.
Last week, we mentioned Morgan Stanley launched their ETF, ticker MSBT, Bitcoin ETF. It brought in over $100 million in inflows in its first week, which was their best ETF launch ever.
Congrats. And then we have Charles Schwab. They're going to be launching direct BTC and ETH trading via their new Schwab crypto product, and it's going to be competing with Robinhood. So Schwab is one of the largest brokerages in the world with more than 11 trillion in client assets. And so that's going to be their product rolling out in the coming weeks. Looks like it's very low fees at just 75 BPS per trade. So pretty cool.
Yeah, I mean, comparing to like Coinbase, that's like usually over 1% for each trade, which definitely eats into your, profits quite a bit.
Yep.
Yeah, 75 bips is pretty good. Saw this that I thought was also cool. Tether is launching their own self-custody Tether wallet. At first I thought this was like a scam, and then I realized that it was real. And with Tether, you always have to be like, people impersonate Tether all the time on X. So at first I thought it was fake, but it is real. They are launching Tether wallet with USDT and USAT and Bitcoin support. So they're supporting both stable coins and Bitcoin. And that Bitcoin support also includes Lightning, which is very cool. They also are launching these unique tether.me human readable addresses. So instead of, using a long Bitcoin or long Ethereum address or whatever, you can just use like a username effectively for tether.me, which is pretty cool. So Tether has their own wallet now. Very
cool. You want to shout out Tim Draper?
Yeah, Tim Draper is still a legend. I saw this tweet that he posted this week, and it was getting me hyped. So I'm just gonna read it. He said, "When I heard about the U.S. Marshals auction, I bid over market at $632 and bought all 9 lots offered." He went on Fox Business in 2014 and said that Bitcoin would hit $10,000 in 3 years. The host looked at me like, "Why did we have this guy on the show?" And then 3 years to the day, Bitcoin hit $10,000. After that, my predictions have not been so prescient, but I have reason to believe that Bitcoin will reach $250,000 in 18 months. And eventually, I expect the number to be higher as Bitcoin rises and the dollar falls to inflationary pressures. So you got Tim Draper predicting 250K Bitcoin in 18 months from now.
Crazy.
Next year.
Shout out Tim Draper. And then the last one we have on here, I saw this, an OG whale from the Satoshi Nakamoto era, who had been holding for 15 years without moving any Bitcoin, has just sold everything, and that totals 3,500 Bitcoin. It looks like they dumped them all at once, cashing out around 260 million, which is huge. I don't know if that's good or bad sign, but I mean, congrats to them. You're going to live a very happy life.
I mean, like with strategy in the market, right? Like strategy bought almost 14,000 Bitcoin this week. So, the whales that are selling all that Bitcoin is just getting eaten up by strategy and some of these other companies.
Yep.
People are buying Bitcoin, even though some are trying to sell.
I mean, maybe that's just one wallet they held to. Maybe they have like multiple other wallets in there.
Yeah,
that's just their spending wallet.
Yeah, it's their checking account equivalent,
exactly.
not their savings account. Yeah. Okay, I think that about wraps it up for the week. Lots of important stories this week. Thank you everybody for tuning in. We are streaming live on goodforbitcoin.com. You can catch all of our past episodes there. Subscribe to us on YouTube, on Spotify, on Apple Podcasts, wherever you listen to your podcasts. And we are streaming here live every Friday at 2 p.m. Eastern. And have a great weekend, and we will see you all next week.
Have a good weekend, guys. Bye.